Dear viewers, today we will discuss very important topic, determination of interest rate. First of all, we will discuss what is determination of interest rate. Then we discuss further points. The interest rate is the cost of borrowing money and the reward for lending money. It is a key determinant of economic activity in an economy. The interest rate is determined by the interaction of the supply of and demand for money. First is supply of money. The central bank controls the supply of money in the economy through its monetary policy. The central bank can increase or decrease the supply of money by adjusting interest rates or buying or selling government securities. Second one is demand for money. The demand for money is influenced by several factors, including the level of economic activity, the level of borrowing and lending in the economy, and the level of uncertainty. An increase in the demand for money can lead to an increase in the interest rate, as people are willing to lend money at a higher rate when they want to hold on to a larger amount of money. Third number is equilibrium interest rate. The interest rate is determined at the point where the supply of and demand for money are equal. This is known as the equilibrium interest rate. The interest rate is typically expressed as annual percentage rate APR. Fourth one is market forces. The determination of the interest rate is influenced by the market forces such as changes in the level of inflation, changes in the level of economic growth, and changes in the level of government spending. In summary, the interest rate is a key determinant of economic activity as it affects the cost of borrowing and the reward for lending. The interest rate is determined by the interaction of the supply of and demand for money as well as by market forces. The central bank plays a key role in the determination of the interest rate as it controls the supply of money in the economy through its monetary policy.